Hello, my name is Adam Broik. I'm a division editor and supervisor for the Fiscal Services Division of the Legislative Services Agency. For the 2025 legislative session, I will staff appropriations and the new House Subcommittee on Federal Funds and Other Funds. In this presentation, I will review the general fund budget timelines, the general fund surplus, and state reserve funds. The general fund is the primary operating fund for the state and where most of the discretionary spending is funded. Said another way, most of the budget discussions are about the general fund budget. However, it's important to note the state does have funds separate from the general fund. These are not the focus of the presentation, but I will provide a few examples. Fuel taxes and vehicle registrations are one example, and these are deposited in the road use tax fund. Casino wagering taxes are deposited in the Rebuild Iowa Infrastructure Fund, and certain fines and fees may also be allocated to other state funds. The General Assembly may also appropriate funds from non-general funding sources. In FY 2024, more than $1.3 billion was appropriated from other funds. That said, in this presentation, we'll cover the general fund budget, and topics will include budget timelines, the general fund balance sheet and surplus, the reserve funds, the taxpayer relief fund, and key balance sheet inputs. Since we're talking about the general fund, I want to provide a snapshot of general fund revenues and expenditures. The bar chart on the left summarizes general fund revenues. The majority of general fund revenue is individual income tax and sales and use tax. In FY 2024, individual income tax was 38.3% of all general fund revenue, and sales and use tax was 35.2%. Other taxes, the next category, were 13% total revenue, or $1.3 billion. These taxes included but are not limited to pass-through entity tax, franchise tax, insurance tax, and other taxes. Corporate income tax was $661.1 million, or 6.8% of the total. The donut chart on the right displays appropriations by budget subcommittee. The budget subcommittees include Administration and Regulation, Agriculture and Natural Resources, Economic Development, Education, Health and Human Services, and the Justice System. Transportation, Infrastructure, and Capitals isn't listed here because it does not receive general fund appropriations. That said, on the chart, the largest portion is the dark blue pie, which is referred to as unassigned standings. This category includes appropriations that are not assigned to a budget subcommittee and are typically standing appropriations. A standing appropriation is an important concept to understand the general fund budget. A standing appropriation is an appropriation that is codified and is appropriated each year with or without action by the current General Assembly. Of the $4.4 billion appropriated under this category, state school aid is the largest standing appropriation. In FY 2024, $3.67 billion was appropriated for state school aid. For the appropriation subcommittees, the largest is Health and Human Services, totaling $2.1 billion. Medicaid is the largest portion of that, and in FY 2024, Medicaid received $1.54 billion. The next largest is the Education Committee, which totaled $983.7 million. $560 million of this went to the Board of Regents, and $420 million went to the Department of Education. The Justice System has the next largest portion of the general fund. The Department of Corrections is the largest of this subcommittee and receives $430 million. The three remaining committees on the chart receive a smaller amount of general fund appropriations relative to the rest. Administration and Regulation receives general fund appropriations total $70.5 million. Agriculture and Natural Resources received general fund appropriations totaling $43.5 million, and Economic Development received appropriations totaling $41.8 million. However, each of these subcommittees do appropriate dollars from non-general fund sources, and the totals here do not reflect all dollars that are appropriated. The next slide goes over budget timelines. The current state fiscal year is FY 2025, and we'll be working on the FY 2026 budget in the current legislative session. The state fiscal year begins on July 1 and ends on June 30. Almost as soon as the budget year begins, planning on the next year commences. State agencies will begin to identify budget needs, and in October, state agencies will submit budget requests to the Department of Management. At this time, the Legislative Services Agency also receives department requests. Department requests are finalized in December, and at this time the LSA publishes a book which summarizes department requests and provides a first look at the upcoming budget. The Revenue Estimating Conference also meets in December to develop general fund estimates for the upcoming session. The legislative session begins in January. At this time, the governor submits budget recommendations, and the LSA publishes a book that provides detailed information about these recommendations. Appropriation budget subcommittees will also meet the first 2 months of the legislative session and review pieces of the budget and collect information from agencies. In mid-March, the REC meets again and provides another estimate of general fund revenue. At this point, the General Assembly will set general fund budget targets, which is the limit that the General Assembly intends to spend from the general fund. After the passage of the budget, each budget bill awaits final action by the governor. The remainder of these slides will shift focus from the budget timeline to describing how the general fund works. I'll cover the general fund balance sheet, ending surplus, reserve funds, and the taxpayer relief fund. This slide provides a high-level summary of the funds we're going to cover in this presentation and the flow of the general fund surplus. More specific information on the total surplus and the amount in each of these funds will be provided on subsequent slides. The passage of the general fund budget typically results in a surplus. The surplus will pass through 3 funds after this, and the remainder is made available for the next legislative session. The first fund is the cash reserve fund. After the cash reserve fund is full, the economic emergency fund will receive the general fund surplus. Together, these 2 funds are referred to as the reserve funds, and they are intended to cover revenue shortfalls during hard economic conditions. After the reserve funds are full, the general fund surplus goes to the taxpayer relief fund. The taxpayer relief fund was created in the mid-2010s, and the fund was established for appropriations or transfers made by the General Assembly for tax relief or reductions in income tax rate. Once requirements of the taxpayer relief fund are met, the remainder of the surplus is returned to the general fund for the next fiscal year. So the FY 2024 ending surplus will be the FY 2025 beginning surplus after flowing through these funds. This is the first appearance of the general fund balance sheet. The table presented here was published in our review of the governor's budget recommendations. You'll see this table from time to time or something similar in LSA documents that review the general fund. The balance sheet summarizes the financial position of the general fund budget. It shows the status of several key components, including revenues, appropriations, revenue adjustments, the expenditure limitation, the ending surplus, and the surplus carried forward. Another key component is that the columns reflect stages of the budget process. Actual FY 2024 is the most recently closed fiscal year. These numbers are final. Estimated FY 2025 is the current year budget. These appropriations have been enacted, but may be changed by the General Assembly. Standing appropriations, based on need, may also be adjusted in FY 2025. FY 2026 is the upcoming budget and the budget that will be enacted in the 2025 legislative session. Based on the prior slide, you can begin to see the flow of the general fund surplus. For actual FY 2024, total available resources totaled $10.6 billion. Net appropriations totaled $8.56 billion, leaving an FY 2024 ending balance of $2.05 billion. After flowing through the reserve funds and the taxpayer relief fund, the beginning surplus in FY 2025 totals $1.87 billion. The general fund surplus is first transferred to the cash reserve fund. The cash reserve fund is displayed on the left of this slide. So you can see that the $2.05 billion is transferred to the cash reserve fund. This is the FY 2024 ending balance, but it flows through the cash reserve fund in FY 2025. Once the cash reserve fund is full, the surplus is then transferred to the economic emergency fund. Now, the economic emergency fund differs from the cash reserve fund in one important way. There is a standing appropriation from the economic emergency fund for disaster mitigation. This appropriation is called the performance of duty appropriation, and it will reduce the general fund surplus as it flows through the economic emergency fund. Once the economic emergency fund is full, the remaining general fund surplus is transferred to the taxpayer relief fund. A quick pause before I move to the taxpayer relief fund. I've stated that transfers only occur after a reserve fund is full. Well, the maximum balance of the reserve fund is based on a percentage of a calculation called the adjusted revenue estimate. The cash reserve fund is 7.5% of the adjusted revenue estimate, and the economic emergency fund is 2.5% of the adjusted revenue estimate. Together, these two funds are 10% of the adjusted revenue estimate. We'll circle back to the adjusted revenue estimate at the end of this presentation. In total, the statutory maximum for these two funds is $929.9 million in FY 2025 and $872.5 million in FY 2026. The general fund surplus next flows to the taxpayer relief fund, and based on certain conditions, a portion of it may be retained there. According to Iowa Code, this fund was established to pay for appropriations or transfers made by the General Assembly for tax relief or reductions in income tax rates. Another key point, the taxpayer relief fund is separate from the surplus and the reserve funds. In FY 2025, the estimated balance is $3.9 billion. In FY 2026, the estimated balance is $3.6 billion. Transfers are a key factor with the taxpayer relief fund. One transfer determines the funding that the taxpayer relief fund may receive from the surplus, and a second transfer determines what transfers may be made out of the taxpayer relief fund back to the general fund. So transfers may occur in two directions, into the fund and out of the fund. Both transfers are determined by codified formulas, and we'll go into the math for these formulas on the next slide. This slide will provide more detail on how transfers into and out of the taxpayer relief fund are determined. For the transfer into the taxpayer relief fund, this is determined by the difference between the actual net general fund revenue for the prior fiscal year and the adjusted revenue estimate used for that same fiscal year. So when revenue exceeds the adjusted revenue estimate, funding may be retained. And again, we'll cover the adjusted revenue estimate towards the end of this presentation. You can see the calculations for this transfer on the left. In the first column, actual revenue exceeded the adjusted revenue estimate and a requirement to make a one-time transfer for school aid. As a result of this, $870.8 million was retained in the taxpayer relief fund. In the second column, the result of this calculation is less, and as a result, the amount retained in the taxpayer relief fund is projected to decline in FY 2025. In FY 2026, revenue is projected to be less than the adjusted revenue estimate, meaning that no funding will be retained in the fund. Now we'll use the table on the right to discuss the transfer back to the general fund. The transfer to the general fund is triggered when appropriations are greater than general fund revenue. Note that we're talking about new revenue, meaning that the surplus is not included in this calculation. The transfer back to the general fund is 50% of the difference of this calculation. This is a new transfer, first in place in FY 2025. In FY 2025, revenues are currently forecasted to exceed appropriations, meaning that no transfer back to the general fund is being forecasted. In the FY 2026 governor's recommendations, appropriations are forecasted to exceed revenues, and as a result of this difference, $351.4 million is projected to be returned to the general fund. Now that I've shown the flow of the general fund surplus, I want to focus on the actions that influence the general fund balance sheet. These actions take place throughout the budget process and determine how the balance sheet plays out. And we'll just go point by point on this slide. Obviously, the total receipts collected are a key part of the balance sheet. But we only have the final receipts for 1 year, in this case, FY 2024. This leads into the Revenue Estimating Conference, which provides estimates for FY 2025 and FY 2026. On the balance sheet displayed on this slide, on the right side, this is the top line showing where revenue estimates are for FY 2025 and 2026. In 2024, actual receipts were $9.7 billion. For FY 2025, the REC is estimating $9.1 billion, and the REC is estimating $8.7 billion for FY 2026. We'll touch more on the REC soon in a following slide. Revenue adjustments are another key input. Revenue adjustments are legislation, or if in the governor's proposal, proposed legislation that add to or decrease from general fund resources. Typically, revenue adjustments are Ways and Means bills that are passed out of that committee and enacted by the General Assembly, signed by the governor. The LSA will publish fiscal notes for these bills that will identify what the impact to state revenues are. The last item that impacts the flow of the balance sheet is the level of appropriations that have been enacted. Appropriations for FY 2026 will be determined in the current legislative session. I'm going to provide more detail on some of the components that factor into the balance sheet. First, we'll go over the Revenue Estimating Conference, which has been mentioned several times. The REC provides the revenue estimates used to establish the general fund budget. The REC is a 3-person panel that consists of the governor or the governor's designee. This person is typically the director of the Department of Management. The LSA director or the director's designee. The designee is typically the Fiscal Services Division director, and a third member of the public that is agreed on by the two. The REC meets 3 times in the lead up to the initial enactment of a budget. For FY 2026, the REC met in October of 2024, December of 2024, and will meet again in mid-March of 2025. The General Assembly will use the smaller of the 2 estimates for the FY 2026 budget. Finally, you can note the shaded cells at the bottom of this sheet. These cells appear at the top of the balance sheet, and these provide the general fund revenue number that is used in the budgeting process. The table presented on this slide is what the Revenue Estimating Conference produces. You'll note the shaded cells at the bottom. These cells are the numbers that plug into the general fund balance sheet and appear towards the top of that general fund balance sheet. The next component I'm going to go over is the expenditure limitation. This calculation limits the dollars that may be appropriated from the general fund when the budget is initially enacted. This limit applies to appropriations that are enacted during the 2025 session for FY 2026. On the LSA balance sheet, the expenditure limitation will be the shaded row about in the middle of the table. The expenditure limitation is determined by 4 factors. The first item included in the expenditure limitation is the REC estimate. The expenditure limitation includes 99% of the REC estimate for the budget year FY 2026. The next 2 line items included in the expenditure limitation are revenue adjustments. Revenue increases are included in the limitation, but only 95% of the total increase is included. However, revenue increases due to legislation are not always present. For the governor's FY 2026 proposed budget, no new revenues are proposed, and as a result, they are not included in the expenditure limitation calculation that's displayed here. The third item is revenue decreases. Again, this is a revenue adjustment, and they are not always present in calculations related to the expenditure limitation. 100% of revenue decreases are included, and again, they're not present in the calculation displayed here. The last item included in the limitation calculation is the surplus brought forward into the year. 100% of the surplus brought forward is included in the expenditure limitation. This is the final slide that will discuss balance sheet inputs. The adjusted revenue estimate is a calculation that's behind the scenes, but I've mentioned it several times throughout this presentation. The adjusted revenue estimate is used to determine the expenditure limitation, statutory reserve fund balances, transfers to the Taxpayer Relief Fund, and it also impacts contingent appropriations made from the Economic Emergency Fund. The calculation is determined by two inputs. The REC estimate is the first input. More specifically, it takes the smaller of the two REC estimates from either December or March. For FY 2026, the adjusted revenue estimate will use either the December 2024 REC estimate or the March REC 2025 estimate. The last input is the total of all revenue adjustments or tax bills that have been passed by the General Assembly. Again, not all years have revenue adjustments. This final slide ties the flow of the general fund surplus together. The image shows a summary of all activity related to the general fund surplus and budget in FY 2024 and is intended as a quick reference or resource for lawmakers. Thank you for your interest in the Iowa General Fund budget. If you have questions about this presentation or any other fiscal matters, please feel free to contact me or any Fiscal Services Division staff. Thank you again.